Hello everyone and welcome to today's video. So basically, before we begin, if you can please read the disclaimer. Understand everything shown in this video is for entertainment purposes only, and everything shown in this video is just my opinion. Please understand I'm not a financial advisor, so just pause and read the disclaimer once you're done and press play. So let's begin. Hi everyone, welcome to the new video for this week. So first of all, let's go over BTC. So previously you had this local descending channel from the all-time high. We can see currently this channel is still being respected. Well, we saw the lows to the lower part of the channel. We have tried to make an attempt to test the middle of the channel. However, we did not quite reach it, and we started to pull back again, which is fine. So what we want to do is look at where price is potentially going next. So I've pre-set up some levels where I believe is the price potentially can go based on the weekly sort of chart as well, and I'll do some drawings of my TA on the daily chart. So locally, what I'm looking at is going to look at the local fib levels, and what naturally I would do is from choosing this particular high on this wick and go down to this particular low, and what I want to do is choose the standard template, and in this template you can see currently BTC bounced off the 0.133 level, broke above, tested the 3 at 2, failed to break it, and is currently holding at the 236 level. If this does not go further up and we lose this 236 level, we'll look at where can we possibly go locally, and then what we want to do is look at the potential negative side of where price can go. Now this can be a slow movement within the channel, or we can break down out of the channel if for a more aggressive move. If I'm looking for more aggressive moves sort of down, the natural levels I will always look at and target are going to be the 618 level, negative 618, and then also negative 236 around here. So those would be the first levels, and the way that I'd expect this to go is potentially you could easily, if it was an aggressive move down, straight to 236. If it's not and it's over a period of time and we lose this, then we can follow down in that channel, where we could potentially try go lower, bounce off the 0 level, and then aim to try break above the midline of the channel. And if we fail that, then you'll get the downside more to the 236. This would be like sort of local level. If I'm now looking at, say, using the fib retrace, trend-based fib extension tool, then I would want to look at different areas where it could possibly go, and then I want to see the sort of major level or the major points which I can potentially choose where to expect price to possibly move. So I could look at say from around here to the high to that low. And again, what else do you see? So previously we had a confluence of 3 at 2, and that was that rejection. And based on this trend-based fib, we're seeing a rejection of a 618 level. So if we were to break this, my local targets again are going to be 1.127 to 1618, and that would be perfect, and again lining up to the higher side of the trend-based fib. Now this can be, if we were to break out this channel and make a new sort of sideways channel, that would still be fine. But if we reject it and we lose this local 382, which is 236 for the normal fib level, then I want to have a potential target to the lower side. And how am I going to look at this So I can use that trend-based fib tool again, but what I want to do is confirm that this is like the reversal point. So before I will do that, I'll look at the overall bigger picture. And for that, I have another trend-based fib. So not this one, we're looking at this particular one over here. So this is from the previous all-time high to the low to the current all-time high and to where it is right now. And you can see we've been, slowly dropping each level. And in this case, we broke the local 618. We tested the 786. Haven't quite retested the 618 level, like from the low. That's what the ideal sort of area would be. But, we don't always have to do that. And then we can retest back down to the 786. Or, if that fails to hold, then you have the more aggressive move down to the 886 level. If we do go down further, if I'm looking at lower targets, and naturally what I'm going to be looking at is lower targets of around, 1.127, and many people won't like it, but this is a potential target as well, the 618 level, which is at 10k. I'm just will be trading the market per level, and I'm not trying to be biased that we are going to come down here. That's what I'm aiming for. I will take profits as the market moves down. If the market decides to reverse, I will redo my TA and take my profits as per. But I'm going to look at this also from a weekly level. So from a weekly point of view, looking at this fib, you can see there's a confluence over here. There not much over here, so there is that on the weekly. So there is that chance from a weekly point that if we lose this point, the 0.1 level, where we also have an order block, and if this order block ends up becoming, say, breaker block, then effectively you'll get a move like where price will drop down, retest this level, and then drop further. And that would be devastating to a lot of people who are just wanting the price to go up. We've had a nice push up, but what you don't want to do is if you see a retracement for the price, only to realize the bull run has ended and the bear market had started, but only realize the bear market is coming close to an end once it's dropped. That's not what you want to do. So you always want to be ready and trade the market as per level so that you can maximize your profits. So in this sort of case, on the weekly sort of time frame, I'm also seeing a potential cipher pattern as well, which many may not see. And I have a range for that cipher pattern, which is from 12.5 K from the low side to the high of 22k. And that kind of coincides or matches the 1.127 to the 1618 on this Fibonacci pool. So that's another thing to consider. And if we do hit this, then obviously in this sort of area could get a nice strong bounce. And with that bounce, a potential then retest before trying to go back up. So that is one possibility. But for that to happen, the other thing I also have to look at is, I'm looking at this channel. So if we do get this on the high side, this will keep the channel. But if we get this on the lower side, this can potentially be the low area can be effectively like a swing failure where you may potentially get a wick down. And this is something, I've been thinking about. The other thing I have, the way that I would potentially see this kind of play out would be based on something possibly like this. And the reason behind that is what I'm looking for is, number one, this is very close to the mid-level, of the channel. The other thing you also have is you have liquidity zones where I roughly mark them. So you have a potential, bearish block here on the weekly, Now, in order for that to be sort of fulfilled, the natural thing I would expect is price retest the 618 GP area around here to possibly here, and then come down. There is also the potential where price can just pump up and fill this level and then just break down. So, I can't specify specifically whether this will happen first or whether we'll just test, come down, fill this block, which is a bullish block, test that and then drop. There is that possibility. And then obviously, then my targets would be down on the lower side. Okay, there's that one possibility. The other one I'm also looking at is where we come straight down instead of retesting the golden pocket, fill the bullish block, push up, and then create a lower high, and reject around this sort of area, and then push back down. And then as we come down, then there's other potentials where before we could come straight down, we could get to a point, say, on 133, where we might test the lower part of the channel. This is if we lose the channel, or even potentially test this bullish block, which if we lose it becomes a breaker, and then test down. And this is again not financial advice or anything. It's just something that is entirely possible. Everybody wants the price to go to 100k or more, which is all nice, but you have to be prepared for the unexpected, and you can't just expect to always be looking for price to pump or dump. We want to plan for both, and this is what I'm doing. So this is what I see potentially from fib levels, from order blocks, and also from a harmonic pattern. So trade it as you wish. Again, like I said, it's not financial advice, just educational, what I see, and just my commentary and opinion on this. And if I then obviously go back to the Titan indicator, if I load that up, you can see it's broken down effectively into bearish territory. And then if I now look at the same thing on the monthly chart, we're getting close to that level. Now, if I look at, say, a pair which has more data, such as BTC index or BLX. So what you want to see is, you can see here, in this case on the BitMEX chart, we're about to lose the buying power, which effectively have not lost since the bull run, even before, since we've had that 3.5k low originally, and then pushed up, retested that low, and then moved up. And here, technically, because we did not break down all the way down and cross over, you had that sort of bullish run. And now, if we break down over here, you're going to see even potentially harsher move down. And normally, when you lose the zero level of the Titan IG and the red has crossed over the green, it will be bigger drops, and that is what I'm expecting. I know a lot of people may be putting orders around the 30k level, 35k levels. I would be cautious in doing that, because if price just carries on dropping, your orders will get filled, and if you don't have stops, unfortunately, you would lose them. So, I always say trade safely and be careful. Don't believe all the hype. Understand that it's your money, and if you lose it, no other YouTuber, no one else nobody online is ever going to be accountable, and hence why no one should be using even my video or anything as financial advice, because it's not. Again, it's just commentary and opinion, and so you have to be careful if you are taking that risk of trading. And that's basically it. That's how I see it. In regards to the current, sort of move, we had a little push up, but it wasn't enough to break it. So now I'm looking at it potentially locally, seeing a move where price can come down more. And as this is, probably won't cross now. If this moves up with this coming down, this will act like this. And if that occurs, then you're going to get a sudden move down. And from that sudden move, you have the liquidity levels. And if I move back to the original BTC chart here, and if we get that sudden move, you know, you've got a liquidity zone over here and here. So it all comes down to how you want it. I've marked these out in green, so let me just hide some things, as it's probably will get a bit confusing because of so much information showing on the chart. I only load that up when I need to see the levels and how I need, and how I trade it. So, if you look at it from this sort of point of view, we've tapped that liquidity plenty of time. Ideally, we should have moved up, but if we lose it, then we could range in this area. And if we do range in this area, great. And if that is lost, you got the other areas down here. And these blocks are marked from different time frames, so I haven't labeled it. So this one may seem weird, but I believe it may be from 4 hours, but I have to check. But, looking at on the daily side of this, not looking too hot for the for the bulls. I know everyone's been hoping that, yes, this is going to be a bullish divergence, we're going to go up. I'm not in any alts. I converted everything to USDT approximately around here, and have been personally trading in USDT. So, I'm preparing for the worst, and in terms of movement up, I'm not expecting that. I'm expecting a lower down movement, and if we catch that, I will take advantage of it. Anyway, that's it for myself. Please do like the video, support the channel, and join our Discord. It's free to join. Have a chat with myself, the members, and if you are going to trade, and you are going to use potentially leverage exchanges, use our Bybit link. Support the channel by using it. Just be careful. And again, if you do use it and you require, support or chat, and when I mean support, we're talking in terms of how to use the platform. I will bring out a video on how to use Bybit, but there's plenty of videos out there already. Anyway, I'll just end it there. So thank you for joining, and I'll see you in the next video. Take care. Bye-bye. So thank you again for watching the video. And the disclaimer one last time. Please understand everything that was shown in this video is not financial advice. It's for entertainment purposes only. And it's just my opinion. Okay? Thank you again. See you in the next one. Bye-bye.